Welcome back. Hope you're having a good morning. Well, for starters, the SGX Nifty has been moving around. The last I checked, it was more or less flattish, and that's what it's holding at. But let's discuss a few stocks. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Thanks so much for joining in. Well, Dipan, Sambandha Motherson, there's going to be a large deal that's going to be taking place. And there's some pending shares that will be sold. What's your take on this company? A few days ago, we had news coming in from Volkswagen that maybe business is not that good, and the stock reacted to that set of news. Your sense on the stock?
Yeah, Nigel, good morning, and thank you for having me on your show. I'd like to be a little bit underweight as far as Sambandha Motherson is concerned because of its exposure to the global auto industry. And while we are seeing very positive trends from the auto OEMs in India and therefore very positive on the Indian auto ancillary sector, which are focused on the Indian companies. In the case of Motherson, I think it's impacted not only in Europe, but US as well. And considering the global kind of headwinds which are there and the talk of recession and lower consumer spending, auto industry sales globally are going to be impacted, and that certainly will affect Sambandha Motherson. So I like to be a bit underweight. Valuations are fair. And there are many other good choices on the other Indian auto ancillary companies like, say, Minda Corp or Minda Industries. I think they're all doing exceedingly well. So our focus has to be over there.
Okay, well, since we're talking about companies that are doing exceedingly well, I wanted your thoughts on Federal Bank. The numbers were banging this time around. I mean, you had and a lot of brokerages have actually gone ahead and raised their target price. I think Citi has raised their target price to 165. Morgan Stanley has raised it to 175. Motilal has 170. So clearly the street likes the numbers. You think it's too late to get into Federal Bank, or is there still more upsides here?
Good morning, Sonia. No, I don't think it's too late because Federal Bank is still available at attractive valuations. It is a discount to some of the larger banks like the top 2, 3, 4 private sector banks like HDFC, ICICI, Axis Bank. So you can always expect a re-rating of the price to earnings, price to book ratio as well. And being a small bank, it's been a well-managed bank. You can expect the smaller base effect to benefit the company going ahead. And next few quarters also will look as impressive as this. These are great times for banks with a high degree of demand for credit, which brings in higher credit and higher net interest income, higher fee-based income, and the costs have not yet gone up because NPAs are well under control. The only costs which are going up are those for technology and for manpower, but that's easily containable and manageable given the way the business and the book size is growing. So yes, very positive on Federal Bank. And I think it could be one of the good mid-cap outperforming banks in 2023.
Dipan, hi, good morning. Prashant here. DMart sold off yesterday. I don't know if you have any thoughts here. PVR was down some 4-5%. There was a Kotak downgrade, which we alluded to all day. And actually, lots of liquid large names, right? Astral, Devyani, the Nykaa, PB Fintech. A fair bit of selling in some of these names. Go on.
Yeah, Prashant, good morning. You know what the common thread across all these companies is that they are quoted at very high valuations and they have disappointed as far as the numbers are concerned. Whether you take a PVR because of the way the footfalls are taking place, Astral also you see last Q3 numbers, what has come through. And in the case of Avenue Supermarket also, the kind of disappointing numbers which have come through. So I think investors, especially loyal investors who have been invested in these companies for years on end, because most of them have been multi-baggers with the exception of perhaps Nykaa, they are now, I think, slightly lightening up their position, throwing in the towel. They're taking a review of their portfolio that, look, these are companies, they're expensive, they've created a lot of value, but now it's time to perhaps book a little profit over there and go for companies where there is growth as well as reasonable valuation. And I think that's what's playing out across the board in a lot of companies which we have classified as growth, which have great managements, have built a lot of wealth. But then I think because of base effect or some other macro factor, the earnings will not be as strong as it was, say, in the last 3, 4, 5 years or so. So I think that's what's playing out over here. And more companies perhaps may join this list as well going ahead.
Okay. I do want your thoughts on the technology names as well, Dipan, because, now in the month of January, we've seen a bit of a pullback there. The Nifty IT index itself is up almost 2.5%. CP Gurnani, the current managing director and CEO at Tech Mahindra, spoke at Davos, and he said he will continue to be at the helm of the company till the end of the year. So he did give more clarity on the succession plan. Let's listen in to what he had to say when asked about the next CEO, and then we'll come back.
The communication to the stock exchange has been very clear that I am on the saddle till December 23, and the successor would be a CEO designate. There is no immediate announcement, so we will have to wait for a little while.
Okay, no immediate announcement of a successor, but in any case, he's staying put for a while. Dipan, for the sector as a whole, we were just discussing a while back as to how most of these stocks have gained about 5 to 7% this month. You think the worst of the fall is now behind us, and is it time to start nibbling into large cap IT names?
Yeah, I think so, Sonia. The reason is that I think street expectations were very low for these companies, and that always benefits, the stock prices post declaration of numbers. And by and large, I was pretty impressed with all the financial reports which came from all these companies. Growth seems to be intact. IT spending is far more resilient than we thought maybe 2-3 months ago or so. Sure, there are going to be challenges. There are macroeconomic headwinds, and Europe is not looking as great. But on the whole, I think Indian IT companies have navigated this uncertainty very well. And I'm really looking forward to what the mid-cap IT companies have to say, because they are in a slightly different kind of a zone as compared to the large-cap IT ones. But my sense is that things are not as bad as it has made out to be. And hopefully, I think if all the recessionary fears and cuts in spending, if once we are through with those, perhaps end of 2023 or so, you may again see a decent rebound in tech spending, which will benefit Indian IT companies. I think with every recession, Indian IT companies have gone from strength to strength, and this is playing out over here as well. So very positive on these companies. I know valuations on the higher side, but these are great businesses with good secular long-term growth rates.
Okay, all right. Dipan, just stay on for a bit. We